All right, things are starting to load up. I said earlier that we were going to open up about 600 to 700 points. Well, we opened up about 720 and now it's at 705, just jumping around. Well, that's the whole purpose of this video, is why I knew that was going to happen. Because just about every day I try to say what the market's going to open, and I'm usually not far off by a few. It's usually within a range, 50 to 60 points. I'm usually not far off. And the video is to show you how I do that. And it has a lot to do with what the Hang Seng Index, the Hong Kong Index, is doing. It has a lot to do with what the Nikkei Index is doing, Japan. And it has a lot to do with what the Chinese, the Shanghai Index, is doing overnight. Because it all happens several hours, 9, 10, 12 hours over there before it happens here. It's not always a mirror effect, but it is a good snapshot of what's coming. But using that information, let's get rid of this, plus the indexes. Let me bring this back up. Go to the DJI, Dow Jones, and here we go. We're up and running. This is what we were looking at before. Quick recap. Bottom, boom. Bottom, boom. Support and resistance. And that's why I want to get this on the video before the market opened. And we opened up at 700 down, and this is actually going to give me an easy way to show you where the support level was. It opened up here, way down, at that support and resistance level I was talking about before I had to reboot the video. This was the previous resistance levels. This is now acting as support. Yesterday it popped, come up at 1100 points, and today it's down 700 points. It opened up at about the same point that it did yesterday. It made gains, gave those gains back earlier in the open. Why? Well, profit taking. People are scared to hold this stuff, so whatever they bought, if you look here, big day up. That was another 1,000-point gain. Well, then we had a big down day, 700-point drop. And then we had a big day up again, another 1,000-point day. Now we have a 700-point drop. And it's opening, closing, dropping, and gaining at these previous levels. Down here, drop, boom, at a previous level. Big up, big down. And now we're at a previous level. The top yesterday was at these resistance levels. Now for this to continue moving, because down here it's at these previous resistance that's now acting as support. In order for this to go higher, it's going to have to break these previous levels here. These are resistance levels. For this to keep going higher, it's got to break that. Now let me go to a freehand line. Say here, we opened up here. Oh, get off there. Why aren't you giving me a freehand line? Let me draw a line. We opened up here at this support level. Remember, prior resistance is now acting as support, just like it did here. Coming up, hit resistance, go down. Come up, hit resistance, come down. It broke through the prior resistance levels. Then it comes up, came back down, and now that resistance that over here is now acting as support. And then we keep going up. and it hits another resistance level. You see where it stopped yesterday? Well, there's a predefined resistance level already right here. 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 These are previous resistance levels. It's going to have to break these levels. But on this part here, it was acting as support for this continuation up. Coming up, down, hits resistance. Comes up to that resistance area, and now that new old resistance becomes a new support level and starts climbing up. Well, that's exactly what we want to see here. Let's take this off. Let's get rid of all them old lines. Would I say it's safe to start buying after these big drops? Well, that's going to depend on your level of pain, your pain threshold. Are you comfortable with this market yet? If the answer is yes, then you would start buying, because we have a determined uptrend at the moment. Ooh, those glasses got to be cleaned. But we have where it comes down. Let's draw a line. Go to a freehand line. Comes down, big down. Phew. Oop, you moved. Big drop down to a previous resistance or support. And that's where it's at. Came down to that point. Let's get rid of that. No, wrong one. Leave that there. Get rid of that one. Now, it's forming a different channel. Look at that. It's coming up. And it's currently forming a bullish pennant. Because you've got that coming down here. Higher lows, higher lows, higher lows. Get that off there. But if you're comfortable with the markets, depending on your threshold of pain and your pain tolerance, now you could start buying, because we had predetermined levels at that bottom level. This one is at that, get off there. That one was at that level. This one was at those levels. And we're now at these levels. We're now at where resistance is now a support level, and for it to continue going up, it has to break that support level, or it has to break that resistance level to become support. That's what we're looking for. I was trying to make this a short, quick video before the open, but it's coming up, and it's probably going to climb up the rest of the day. That's my prediction. It dropped down 700 points. It's got some making up to do. As long as the Fed doesn't do any more cuts like they did the other day, shouldn't have nothing to worry about. As long as another 1,000 people don't drop dead from the coronavirus, there shouldn't be nothing to worry about. But using the predetermined levels of support and resistance to see where we're going next, that is how I do it. I hope that clears up a few things. I've been getting messages about, well, how do you know it's going to be 600-700 points? How do you know it's going to be 500 points? Well, this is the explanation. And I was saying I wasn't buying. I might looking to start buying some stuff today, because of these predetermined levels. It came down, and now we're forming a nice pattern going back up. At previous and support levels, we have levels of risk, we have levels to shoot for, we have target areas. It's progressing. I wouldn't say 1,000 to 700 point daily swings is the normal. That's not healthy. But as compared to the rest of the market, what it did in the past, let's get that off there, and what it's doing today, we have support, we have resistance levels, which gives us target areas, gives us what to look for if it's going to start breaking down. It gives us what to look for a continuation if it breaks above the previous resistance. So now is a good time while the market is still down, because people were thinking, well, you're going to wait till it goes all the way back up before you start buying. No. You got to have levels. You got to have a risk area. You have to have a reward area. You have to have a cutoff area. And you have to have a target area where you're going for a risk to reward ratio. That's in day trading, swing trading, long-term investing. You need to know what the markets are doing right this minute as compared to what they have done to see where we're going. So you look at the past and you look at the present to know where we're going in the future. That's management. It's not guesstimating what you think might happen. It's having a goal. It's managing those goals and removing as much risk as possible for your retirement and for your future. Even if you're swing trading a week later, you want to know that we're not still dropping while you're still buying. But all right, I'll get off here and start looking for what I'm going to buy. So y'all have a wonderful day and happy hunting.